Okay, recording this video after close of trade Wednesday, 21st of September 2011. It's actually the next morning here in France. Watching the results of the FOMC announcement last night, and well, it's not pretty, is it? And I'm actually kind of sitting here a bit depressed. I should be glad, because if you're a watcher of Emini-Watch, you kind of know that I like shorting the market, and we're about to have another kind of bear leg, I think, and I should be looking at that and thinking, well, lots of opportunities for me to make money. But the reason I'm depressed is because what that means for the economy, the world financial system, and it's not pretty. We've spent the last 3 years twiddling our thumbs and actually doing exactly the wrong things. Like, instead of acknowledging that what we have is a debt bubble and we've reached debt saturation and dealing with that, we've done nothing but try and pump up the money supply and kind of keep the party going, instead of addressing these issues, reconstituting banks, making sure that they have enough capital to go through a sovereign debt default, which is what we're likely to see. It's not going to be in the next day or two. It's not likely to be in the next week or two. It may be in the next few 6 to 9 or 12 months or something like that. And I've never been through a collapse of the financial system. I'm scared. What do you do? Where do you keep your money? How do you stop tragic things happening? And here in Europe, I mean, you don't hear a great deal about what's going on in Greece, but I did read one news story that talked about the suicide rate in Greece going up, and it's all businessmen, 35 to 55-year-olds who've seemingly lost everything and don't know how to continue. And that's the reason for my depression. And the Fed is clearly, we shouldn't be looking to the Fed anyway. It's like they have controlled things for far too long. Of course, things have, when you reach these kind of debt saturation levels, they're not in control anymore. The market's in control. So, having said that, let's look at the indicators, because the indicators have been pretty darn good. Let's look at this. Better sine wave came in. Cyclical resistance here just above 1200 with yesterday's activity. 2.8 million contracts traded all the way down. We've got this kind of bear flag pattern. And what this means is the energy switches to the downside. While we've been having these kind of swings, swing down, kind of energy to the downside, energy to the upside, down and up, and now the energy switches to the downside. When you look at this same chart, just daily, just showing the better sine wave here, with the energy switching to the downside, I mean, we're just inches away from these kind of 1120 type levels, and so they're likely to crack, and this will be a bear flag, and that'll mean 1,000's the target on the way down. And here we go, 45-minute chart, our old friend, end of trend. I keep on talking about this when you look at cycles and trends. So cycles in the highest time frame, and you look, the corresponding lowest time frame for a daily chart is a 45-minute chart. 405 minutes in a day, divide that by 9 gives you 45 minutes. 45-minute chart, end of trend. When that end of trend happens, it lines up with the cycle turn in the highest time frame. That's a kind of high probability trade. Just looking back over the sequence, it found the low end of trend of the last kind of move down, if you like. It was a dirty end of trend, pulled back to end of trend, and we kind of went past on the last leg up. There wasn't one on this leg, but there was on this leg. So just looking at those lowest and highest time frames, always kind of useful. And we look at all the indices that better sine waves kind of come in for all of them. So this is the Dow, there's the turn in the better sine wave. Here's the S&P 500, there's the turn in the better sine wave. Russell actually signaled 2 days ago, kind of had that in there. And then here's NASDAQ again, signaled actually 3 days ago on the NASDAQ with a stopping volume professional bar right at the top there. So all of these have kind of come in. And the trend indicators was good as well. Trend turned a couple of days ago and has kind of been heading on the way down. So all of these have kind of gone this way. And then now that means we're back in consolidation here on trend line. White bar means that we've kind of closed within this kind of consolidation, kind of rising and falling trend lines here, which means we tried to break out above this falling trend line. We've come back into congestion, which means we're going to test the other side, and that's this kind of trend line on the downside, which means if we fall through that, And just to revisit the hypothesis chart, I'm pretty crap at long-term forecasting. I think one of my subscribers said that the other day. And the last time I put a hypothesis, this was the first hypothesis one that kind of was quite nice. This was the last one, not changed a bar on this. The only alteration I've made is when we had rollover. So we had this kind of market rising up here. I thought we'd go for a 10% correction. In fact, what we got was a 20% correction, and then after that 10%, I thought we'd, make slightly, kind of test the highs or make new highs based on the hypothesis, just to flush out everybody, and then kind of get this move going. Well, what happened was we had a 20% correction. The move back has been incredibly weak. To this kind of time area where we're kind of likely to see a term has been incredibly weak, and so that's why I think we're going to head on down. And interest rates, I've been talking about this, although the Fed announced their twist kind of move, and that we had a sharp decline in the longer term, the 30-year rates. This is the 5-year. 5-year kind of did nothing. Here's the 10-year, went down pretty strong, but there's the 30-year, bang, down into 3% or 3.04%, kind of down here. And I've been talking about this. We're in a downtrend. We're coming up to a cyclical pullback in a downtrend, so this is going to, continue on down. And I've been talking about this on the monthly charts, for ages, just saying, look, we've got this swing in the monthly charts on interest rates. It's going to continue on down, and here's the 30-year. We're a couple of months away from this thing bottoming out. 10 years, same deal, a couple of months before bottoming out, and 5-year even further in terms of the 5-year kind of bottoming out here. So this means rates continue on down, bond market kind of continues up. And this isn't like this isn't kind of an asset shift from bonds to equities, equities to bonds. I think this is a flight to safety thing. And dollar index, said a couple of days ago when we had these kind of professional bars, what was we've had the currencies in this really tight channel, relatively tight channel over the last several months, 6 months or so. And now we're starting to break up above it, and we had these two blue professional bars kind of setting off this move from 75 up to 77. I said, what was kind of critical was the lows of these bars. If the lows get taken out, then that was more likely professional profit taking. We're going the other way. But if we come back, test those lows back into this kind of accumulation zone, and it kind of holds, bang, trends on. So we're breaking out above cyclical resistance at this point into an uptrend on dollar index, and you can see exactly the reverse happening on the euro. Again, we were in this fairly tight kind of consolidation zone in the mid 40s, $1.40 for the euro, and here are these two blue professional bars kind of setting us off on the downside. We had a little bit of Rambo pattern kind of down here where we kind of bounced off that, so the amateurs getting a little bit ahead of themselves here, but we came back to the high of that blue professional bar, this kind of selling zone here for those professionals, and we're coming down to cyclical support at this level here. So it looks like this might be well taken out, and then we'll be in a downtrend on the euro. Yesterday's video, I was saying we wouldn't have a second trend in yesterday's video when I recorded that halfway through the day, and of course that's exactly what we did get. But with yesterday's videos, we was mentioning about all these end of trends that were coming out for 40,500 tip bar chart. There it is, end of trend kind of coming off. We didn't get some kind of exhaustion volume on the upside here. We just got a really weak kind of end of trend amount of buying. We've kind of sunk into this downtrend here, sitting at 11.43 as I'm recording this. We go to the 13,500 tip bar chart. This is the activity yesterday as we were coming into 12.10. We had all these blue professional bars here, and I was like thinking, is this all accumulation volume getting ready for a jump above 12.10 into an uptrend on the way up? And of course, well, no, it was not. It was all professionals dumping their positions. The way they just ratcheted that market up, just kept it moving up and up and up and up, and getting out of their positions, just incredibly clever. Anyway, so we're kind of broken to the downside, and this kind of volume falling through here. We've got exhaustion volume, but we've got nowhere near kind of pullback to end of trend. In this kind of sequence here, this one didn't get made. There was no kind of exhaustion volume to hold that one here. So we've got exhaustion volume, so we'll have a pullback to end of trend. The question is, where that's going to be. In terms of my trading, yesterday was pretty ordinary actually. Ended up minus 2.5 after 7 trades. I was down 10.5 at one point after 4 trades at the beginning of the day. Sometimes people say FOMC is a bad day to trade. I don't particularly find it a bad day to trade, but certainly it goes very quiet usually a couple of hours before the announcement, but I just couldn't get the direction right. But looking back on it, should have been clear to me. I was trying to take long trades, and 1500 tip bar chart, we had all these kind of exhaustion volume patterns here, but after we'd had testing back up at this 1200 level, which we know is psychologically absolutely key here, we had exhaustion buying and flush signals on this rise and this rise here, then the market kind of just gave way. And I don't know why I didn't see that. I just I couldn't figure out the trend direction during this whole kind of sequence here. I found it very difficult. Didn't have very many blue professional bars to kind of lead the way, and when they did appear, they kind of appeared in the middle of sequences instead of at extremes, which should have given me a bit more of a clue. But anyway, that being said, I did manage to take one winning trade, two winning trades, two 4-point trades, kind of later in the day. One was kind of midday. I can't remember actually which sequence it was here. I'll add it to the video. And then I actually went long kind of midway after we had this kind of decline after the FOMC, and I was taking this off on the 4,500 tip bar chart. I was taking this off a second cyclical turn after end of trend. We'd had our end of trend, but exhaustion selling at that point, so waiting for the second cyclical turn here where we had a flush signal. Believe it or not, I made 4 points on this rise here, which ended up being amateur up bars on the 4,500 tip bar chart after we'd had the spike in FOMC with a professional up bar right at the highs here, kind of getting out, and then the thing just took off to the downside. So I count myself pretty lucky that I got out of that, and then I didn't trade after that. But there it goes, it just kind of collapsed into the close, and now it's kind of kept on going. For me, sometimes it was down 10.5, and it was just kind of stupidity because I was trying to guess the market instead of like sitting back and actually watching what was going on. And sometimes it's important for me to step in and actually have a winning trade in order to make some back. I hate like ending the day with a loss like that. That's pretty harsh, but to make it back to 2.5, I'm quite happy with that. But then stop at that. If I have two winners in a row, I mean, I know that's a bit lucky. So just stop at that and not do anything more. But psychologically, it is quite important to kind of get back on the horse during the day. That's just because I've got kind of confidence in my signals, and it's me that screws things up. It's not the signals from the indicators. So there we go, some thoughts after FOMC. I'll tag on one of my winners because that's worth watching. One was the penultimate trade was a nice little setup, but I'm not going to put on any of the rubbish because you'll just see me kind of talking in a confused manner about not knowing what way the market was going to break. And again, apologies if I sound very dour today. It's just I am a little bit kind of depressed about what the future holds. So, but these things, they're never a straight leg down. We've got the 4,500 tip bar chart. We've had exhaustion selling. We're coming into this move. We'll have a pullback to end of trend, kind of, and we'll have a bounce, and everybody will feel happy for a few minutes. I just worry about the medium term because I don't think it looks good. Anyway, it's, as I said, energy on the daily time frames has now kind of flipped to the downside here on the 45-minute chart. We've broken below cyclical support here, so on a reasonably high time frame we're in a downtrend. It's got to make pullback to end of trend. Hope you traded well and took advantage of yesterday's volatility. 91 even, and the reason we're getting short, end of trend's just come up on the 500 tip bar chart here. There's a bit of volatility around this. Anyway, 500 tip bar chart shows we've got kind of exhaustion buying, bearish divergence. This end of trend was a really quick signal, and checking my stops here. 1500 tip bar chart, we've had exhaustion buying, and it's a pullback and a downtrend on the 4500 tip bar chart. A whole bunch of blue professional bars came into this pullback level, quite extreme kind of buying there. So it could be that we're reaching an end to this downtrend because we've had end of trend on the 1500 tip bar chart, but just think there's a good chance we're going to test back down to these kind of 88 levels. So just in short, let's see if we can get lucky on this one. A few minutes later, just been sitting through a little bit of retrace back up to 92.5 here. Another cyclical resistance level kind of comes in. Just had this blue professional bar kind of come down. We're breaking the lows of that bar, so hoping now that that little test is kind of over and that was kind of falling through the ice. But let's see. Okay, for a few minutes, just been sitting this through this kind of retrace up to 91.5 here. Blue professional bar, up bar on the 15, got broken to the lows, which is kind of good. It was a flush signal here on the 500 tip bar chart, so gradually been running out of steam here. Bearish divergence, kind of exhaustion buying here, and then a flush signal finally, and then we come into an exhaustion selling signal. So this hopefully will kind of get this move. Whoa! Well, the target's at 87, so might get lucky. I don't. Just looking around the time of this, just could be a whole bunch of stops just been run, so that's good. Hopefully we'll keep on going down. Go just out 87 even for 4. Cool. So that's good because I needed a win, having had a pretty lousy morning and a lousy surf as well. Broke my leash. Anyway, this is kind of going down pretty dramatically. Let's wait and see. It's 11:27 a.m. so